Hello friends and welcome to the pre-market view. Finally the D-Day has come and it has all the making of a very action-packed and eventful day. We have a good strong global cues coming out from the US and European markets. The Asia is also showing a lot of strength on the back of the statements coming out from Ben Bernanke that the easy money policy is likely to continue for a while. Also there are some economic data points which are definitely encouraging. And in terms of action back home, friends, the flows wise situation is not that great. Yesterday also in the cash market, FIs were net biased to the tune of about 100 crore, not much of an action in the index futures. And in the domestic side, we had seen marginal buying. And the markets also saw a bit of a recovery in the last 2 or 3 hours, and it closed somewhere around 58.20 or thereabouts. And looking at the SGX Nifty, we are going to have an uptick of almost about 40 to 45 points. But it's going to be an important day from both the budget as an event perspective as well as F&O expiry perspective. So on that note, let me invite Shaival to take us through important F&O cues, data and strategies that we can have in the F&O markets.
Good morning friends, let's have a view at derivatives now. Friends, from past couple of trading sessions we've been seeing that both domestic as well as international cues have been weighing on the market and has led the market to breach all the important support levels on the lower side, and we've seen that Nifty has breached the mark of 5,800 on the downside. Now in yesterday's trade we have seen that Nifty has taken support around the mark of 5750 and has bounced back sharply during the later part of the day, and during this course of time we have seen some short positions been building up in the market. But on the other hand, the PCR ratio has been continuously declining and is currently at 0.79, which is a sign of worry for the market. Now if I talk about the activity on the options front, we have seen that the activity has been widespread as we have an important event today. It's clearly visible that 5,700 March call as well as put option has seen a good activity, whereas 5,700 put option has seen a good activity. Whereas on the higher side, we have seen that 5,800, 900, 6,000 current month option and 6,000 March call option has seen a good activity. So that's been clearly suggesting that market is waiting for a clear direction once the event is done. And talking about the implied volatility, what we have seen is that current month implied volatility has seen a significant uptick by say around 15 to 25%, whereas next month, that is the March series, implied volatility has cooled off say by around 5 to 6%. So this difference is mainly because of the event which is lined up today. Now as today is the event, we might see sharp intraday whipsaws and market would remain volatile. And we suggest buying 5,800 straddle option, 5,800 straddle, that is 5,800 as well as call as well as put option with a spread of around 75 rupees. Now we are trading below our weekly VWAP. Our bias for the market is still negative, but today's event is going to decide the direction of the market. So going forward, 5865, 5900 would act as a hurdle for the market in coming days. If markets are able to take on this level, then we'll need to review our bias. From intraday perspective, we are not recommending any stocks, but yes, we are recommending options for expiry. One can buy BHAL call option of 210 strike price, Unitech call option of 30 strike price, and Tata Motors put option of 280 strike price. If one find it's at appropriate level for the expiry. These are the closing price, but we would recommend to buy it once you find it at the appropriate levels and leave it for the expiry. Thank you.
Friends, here are the important news and events that we are tracking today. First of all, as we are going to have a presentation of the union budget, let me quickly run you through the important things that we shall be watching out for in the budget. The fiscal deficit target for FY14 is something that everyone is going to be focusing on, and the expectation is that it's going to be about 4.8%. So anything above 4.8 or 5% is perceived to be negative, and if it's 4.8 or below, it would definitely be positive. And the composition of the fiscal deficit is very important, because if this fiscal deficit is going to be arrived at by cutting down on the expenditure, particularly on the subsidy front and other government expenses, it's going to be positive. Whereas if there is going to be any kind of an aggressive or unrealistic expectation on the revenue front, it is not going to be taken well by the markets. Also, assumed growth of rate at about 16 to 17% is something that the market thinks is going to be realistic. Also, other important things to watch out for are the realistic assumptions both on the disinvestment or privatization and the telecom receipts through auctions. About 30,000 crore each for each of the categories is considered to be realistic, and the net market borrowing plan for next year is very crucial, and the expectations are that it's going to be around 5 lakh crore or a little below that. That should definitely be taken well by the markets. And lastly, some kind of a timeline or implementation of the GST rollout is something that the market is watching out for. Other two important things which are very crucial from the overall economy perspective are the infrastructure sector as a whole, where the investment cycle has come to a halt. What kind of plans and incentives the finance minister is looking at providing to revive this investment cycle is something very crucial. And the other important part is the mobilization of money from retail investors into equity markets. We've seen in the last about 3 to 4 years that the retail investors are taking out money from the market, and there are no real incentives for putting money into the market. So what exactly does the finance minister offers on this front is something that the market will be watching out for. In terms of company specific developments, Strides Aircolab, we have a big positive news as the Mylan has actually decided to buy the Agila Specialties for about $1.6 billion, and this deal was around the corner. Strides was talking to a couple of buyers including Pfizer, and the initial amount that the market was looking at was about $2 billion. The actual deal has happened at about 30% lower than that, but still it's a big positive for the company. So one can go long on Stride in today's market with a stop loss of 966 and a target of about 1035 to about 1060. Unitech, some positive news as Blackstone is in talks to buy Gurgaon SEZ for almost about $450 million, which is currently owned by Unitech Corporate Park. So one can go long on Unitech with a stop loss of 29 and a target of 31. For the customers who are trading on the option side, could look at buying a 30 call of Unitech for the current expiry to participate in any possible upside on this news. Network 18, some positive news as the company has entered into an agreement to divest two investments that it has in the Infomedia Yellow Pages and Ask Me services. So one can go long on Network 18 with a stop loss of 31 and a target of about 33 to about 33.5. ONGC has started supplying gas under the direct marketing from its isolated KG-D6 basin to the Steel Exchange of India at a price of 10,000 cubic meters per day, which is positive for ONGC. So one can go long on it with a stop loss of 309 and a target of about 325 to 330. Also, clients could look at buying a 320 call of ONGC for today to participate in the possible upside. That's it from all of us, friends. Have a great trading day, have a great budget, and we'll see you tomorrow morning at the same time.